or the assessees who have evaded the taxes have already bought the harassment and also bought little more than that. It is the honest taxpayers who suffers. But I am happy to note that the younger generation in India, and some of them I keep on meeting in Bombay or in Delhi, I found there is a change of attitude. Why I am telling this? That there is a big role you have to play. Recently, when I went to US, KPMG, the firm of chartered accountants, as they are known in US, had called us for a lunch, and there I found so many officers from US IRS service who have joined that KPMG on lien, who will again go back to IRS after the tenure is over. They are serving the taxpayers. They are preparing the returns. They are representing the cases before the IRS officers who were their colleagues the other day. And in the Indian Revenue, US Inland Revenue Service IRS building, when we went there, we found the photograph of a person who was the head of a multinational company as the chairman of the taxes. So many from KPMG, Price Waterhouse, private companies, they also joined the IRS. There is no conflict of interest. Why can't you have an India, which I visualize maybe 20 years or 15 years from now, where this entry of chartered accountants into our service and our service people going to your firms will be more in number, and you have to, all that you have to implement is the act. There is no question of pro-SSE or anti-SSE. You have to be pro-act. That is how it is in America. And that is why in America, as you know, when Al Capone was arrested, he was arrested for evading taxes, not for drug peddling, not for bootlegging, or for the prostitution regime that he had heading in Chicago. So in US, it is difficult to evade taxes, easier to evade other crimes. So I foresee that kind of situation in India. For that, there is a change in the attitude of the young chartered accountants, and also the advice of the older generation. And in this also, you have to deliberate how to bring about this change. So simplicity and clarity in this, you will have a big role. How to make the law simple, what kind of advice you give to the taxpayers will largely depend on this. And finally, on one more aspect, I would like you to have deliberation, if not in this seminar, later on sometime. That is, what is the role of chartered accountants in having a non-adversarial tax administration? We are seized of the problem, but it is alarming to note that the number of litigation before the CIT appeals have gone up tremendously all over India. On the part of the government, we have tried to reduce the litigation pending before the High Court and Supreme Court, and also ITAT, but the number of cases pending before the CIT appeal have gone up. This may mean two things. Either the assessment done by the officers, my officers, are bad, so bad that you have to go to the CIT appeal for relief. Or it may mean that government's attitude to reduce litigation have not been matched by the effort of the tax practitioners in advising the taxpayers that these are the issues where you should accept the litigation addition instead of going to the CIT appeals. So here also I would like to see some deliberation on your part. With these words, I take leave, expecting a grand success for this seminar. Thank you all.
Thank you. Thank you very much, sir, for your encouraging words. And we hope we have also taken note of your advice for role of chartered accountant in non-adversarial tax regime. And we, all the fraternity of CA, hope in your tenure, current tenure, you achieve more than what your budgeted target. And I wish a very successful regime for you for this year, sir. So thank you very much for coming and attending the seminar. And now I request our speaker of the session, Dr. Girish Ahuja, to address the gathering.
Honorable Chief Commissioner of Income Tax, Mr. D. Das Gupta, Chairman of the Eastern India Regional Council, Mr. Ranjit Agarwal, Vice Chairman, Mr. Subhash Sharaf, ladies and gentlemen. Well, friends, as far as real estate transactions are concerned, you have noticed some changes this year also, and very important changes have taken place. I'll be talking about those changes also. But first issue which I'm going to take to you is development agreement. These days, everywhere you find, length and breadth of the country, people are going for development agreement. So what kind of a system is this? What kind of the liability, tax liability is there in case of development agreement? I'll divide this in two parts. One, development agreement for a residential property. Somebody approaches you, I will demolish this building, I'll get it constructed, some flats I'll give it to you, some flats the builder will retain, or he may pay some money also. And second is commercial transactions, where a building is demolished, malls are being constructed, various shopping complexes being constructed. So I'll be taking it in two parts. First part, real estate transaction. Somebody approaches you, you either have a land or you have a residential house. He says, I'll demolish this house, I'll construct a residential building on that. Maybe let us take up simplification purposes, any ratio, but let's say 50-50, to make it simple. That means, suppose I have a 500-meter plot, building is already there, he approaches me, I'll demolish this building, 6 flats I will construct, 3 flats I'll give it to you, and 3 flats I will retain. Maybe I also give money, builder says. The question which comes is, will there be capital gain? Number one. Second, at what point of time the capital gain will arise? Second point. 3, how would you compute the capital gain? Third point. Fourth point, can you take a benefit of section 54 because it is a residential property? Or can you take a benefit of section 54F because it is a land? These are the issues which will be involved in a development agreement. Will there be a capital gain? Certainly. If it is your investment, if it is your house, or it is your land, there is going to be a capital gain. At what point of time the capital gain will arise? And how would you compute the capital gain? There used to be an old judgment, Chaturbhuj Dwarkadas Kapadia, 260 ITR, Bombay High Court, where in that judgment, it's a very old judgment, it was said, look here, the day you enter into an agreement with the builder, that very day, the capital gain will arise. That was the old judgment of Chaturbhuj Dwarkadas Kapadia. A very beautiful judgment came. There are many judgments thereafter. But there is a judgment of Jasbir Singh Sarkaria. It's not a high court judgment. It is an authority for advance ruling judgment. 164 taxman. Authority for advance ruling. Let me tell you what exactly that judgment is. One Jasbir Singh Sarkaria was US resident. He had lot of land in Punjab, along with his brothers. The builder approached him, that this is an agricultural land, no doubt. I'll get the land use changed, get a residential colony passed, and thereafter I'll construct residence flats here. 32 flats I'll give it to you, and the remaining flat I'll keep with me. This was the understanding in Jasbir Singh Sarkaria. The authority for advance ruling said, wait a minute. In the beginning, it was an agricultural land. And what was the builder supposed to do or the developer supposed to do? Get the land use changed, get the residential colony passed, and do the other formalities? At that point of time, the builder is or developer is acting as an agent on behalf of Jasbir Singh Sarkaria. And therefore, there is no question of any capital gain tax at that particular point of time. But after all formalities were over, everything was done. Now, Jasbir Singh Sarkaria entered into an irrevocable power of attorney with the builder or the developer, wherein the control and possession of the land was handed over to the builder. Control and possession of the land was handed over to the builder with one rider. The rider was that the property will not pass to or land will not pass to the builder unless he hands over 32 flats to me. Unless he hands over 32 flats to me. This was the understanding, and the complete control and possession was given to the builder. The authority for advance ruling held it that by putting a restriction that the property will not pass on to the builder unless he hands over the flats to me has no meaning. Why? We have a section 2 clause 47 subclause V, which says where a possession is handed over against payment or promise to make a payment, it is called as a part performance of the contract under section 53A of the Transfer of Property Act, and it will be regarded as transfer whether payment is received or not. So therefore, because irrevocable power of attorney has been given, complete control and possession of the land is given, the capital gain will arise at this point of time, and not at the point of time when 32 flats are handed over to the assessee. There are judgments for this many, but if you wanted, you could have entered into an agreement of a such nature that I don't have money, the builder has approached me, I have requested the builder to enter my premises only with one condition, to enter my premises for the sake of construction. But the property will still remain with me. And after the construction is over, I will hand over certain flat to the builder in consideration of what he has given to me. In that case, the capital gain will arise at the point when the building is completed and possession of the flats are given. And that is a judgment of Atma Prakash and Sons, 175 tax ban, Delhi High Court. It depends upon the type of agreement you have entered into. Once the possession is handed over, the matter is over. Because you have handed over the possession against payment or promise to make payment. Capital gain will arise at this point of time and not at the time when the building is completed. There are many advantages of that also. Wait a minute, I'll explain that. So this was Atma Prakash and Sons, 175 taxman, Delhi High Court. The other was Jasbir Singh Sarkaria. Then there are so many judgments, T.K. Dayalu and many other Madras High Court judgment and others. There is nothing to worry about that. But capital gain will arise at this point of time. How would you compute capital gain? The question comes now. If it is to arise at this point of time, how do you compute capital gain? Now, what was you were having? 500-meter building, residential house. What is the agreement? 50-50. So what are you doing? 50% of the building is being transferred to the builder. 50%, because agreement is 50. In consideration of the balance 50% building, which will be demolished by the builder and flats will be constructed and handed over to you. Are you getting my point? What is the exchange? 50% of the building is being transferred to the builder. The balance 50% remains with you. What will he do? He will demolish my 50% portion. He will demolish his portion also. But I am concerned with my portion. He will demolish with my portion of 50% and construct flats and that and hand over those 3 flats to me. This is what is going to be the agreement. So meaning thereby, what have you transferred? 50%. What? Land or building? It depends. It depends. Have you transferred the building or have you transferred the land? Why? If he demolishes on your behalf, then you are transferring land. But if he demolishes himself after the transfer of the building to him, then what is we have transferred to him is residential house. What we have transferred to him is right. So let him demolish afterwards, not before. If he demolish on your behalf, that means it is land which is being transferred. If you have transferred 50% building to him, what have you transferred to him is residential house. The question is, who gets that malba? Malba, aap samajhte hain? That who gets it? If the malba belongs to the builder, whatever portion, you have transferred the house.